Hey guys, Steve here with the strategy session for Monday, July 28th, 2014. Hope everybody had a great weekend. Hope you got some nice rest and relaxation and got ready for today with the weekend update we put out on Saturday. If you haven't already, please make sure you get over to the weekend update, as that'll be the basis for all the strategy sessions going forward this week, and then we'll issue a new one on next Saturday. So getting into it real quick, first thing I wanted to just say is I put out a couple tweets, and if you haven't already, please make sure you do follow me on Twitter, StockTwits, Google Plus, and subscribe to the YouTube channel. But for more intraday stuff, obviously Twitter and StockTwits are the place to be for me. So I put out a few tweets this morning, basically indicating that the tick was pushing to negative 1,000, meaning that at that one time there were 1,000 more down ticks in the market than upticks. So essentially, in layman's terms, there was a lot more sellers than buyers at that time. But the issue that I saw and that I pointed out was, even though we were getting these negative 1,000 tick readings, we were actually closing the bars right up by zero. So, which tells me that yes, there are sellers, but there's not enough sellers to keep this down at the negative 1,000, negative 800. It's not a real sell-off day. So when you see something like that, you add that in with, like I said, the S&P 500 right at support. And this is something that you just got to keep in the back of your head. It's not for how we trade, but it also, you got to remember, who's out there and who's buying and who's selling in front of you. So for us, I looked at it and said, all right, well, we're not sustaining these negative 1,000 tick readings. And sure enough, the next bar that came out was a push higher, and we pushed in the highest reading at that time that we had received of the day, around 580. So at that point, the market changed and buyers were starting to outweigh sellers. So sellers really exhausted themselves at those levels. They tried to push it through that trend line, and they couldn't. And then sure enough, the rest of the day we rallied. I mean, we were at one point, we were down, I think it was to 1860, or 1960. So we were down about 10 or 11 points on the day, and we actually closed up a point for the day. So again, it's not something we use for our trading purposes, but for me, that this is something I look at during the day just to see how strong the market is, how weak the market is, if it can continue to sell off. It's just something that I feel helps me, really analyze and react to pricing. So with that said, the fact that we got those negative 1,000 tick readings and the fact that we bounced off trendline support tells me, okay, well, if we actually break this trend line, the next obvious spot that we would go would be 1940, and I do think that may be what happens. But this trend line is very well intact, and we do have valid reason to believe that once that trend line breaks, we revisit those lows. So just a little thought process that I have. Like I said, it's not something you need to know. It's not something that I feel you need to learn, but I just like to have it in the back of my head so I can understand how the market's reacting and who's the buyer, who the sellers, and how strong they are. So with that said, let's get into the S&P 500 futures. As we said, bounced off of this trend line support. I do think this trend line does break and we revisit the lows, but at right now, price tells me that trend is intact. So higher prices, that's fine. My gut feeling though is that we do move lower, but we don't trade on gut feelings. We trade on price action. And like I said, price action is telling me higher prices are coming. The NASDAQ, same thing. This morning, it actually was down, basically retesting previous resistance area, which is also right around trendline support, bounced higher. So again, at this point, price is telling me that we want to move higher here. And the last one being the Dow. The Dow was breaking this morning. Obviously, it was down here, broke the trend line, but look at where it closed. This is why we use the closing prices. Look, it closed right above trendline support, right back in in consolidation. So again, the bears tried to break us this morning, but they didn't have enough oomph to do it. So let's go through our stocks real quick. A couple good performers today, and we're going to end up selling one, which I'm sure you guys can figure out before we get to it. Apple broke out of this consolidation. Nice trend line support coming through, moving towards the highs, new highs, new 52-week highs, but not new all-time highs. I still think we see 100. That's a given as far as I'm concerned. $100 price tag. We could definitely see some selling there just because of it being a psychological level. But trend line's intact, and until we break 93.09, we stay long Apple. ADM, take a look at the free chart for today, free trade idea. Basically consolidating today, an inside day to yesterday, really waiting to see where it moves. And, like I said, for right now, under 47.32 is our level to get out. American Tower continues to move higher. Waiting, it looks like earnings are the 30th before the market. So Wednesday before the market opens, we'll have earnings in American Tower. But for right now, I still think our stop is below $90.80. The next one is the dreaded Amazon. So we're going to actually be selling Amazon tomorrow at the open. I do, again, gut feeling tells me that this is going to end up being a higher price than we're going to sell it. But for right now, we're going to trade our plan. Our plan was to exit under 324. We on Friday, it closed at 324.01. So that wasn't the plan. That wasn't the day to sell. But today it closed at 320, and we're going to take that time and actually exit the position. But I'm looking now at this area here as looks like what is support. These previous highs on the 2nd. And right here through the 30th and the June 2nd. And now what we did is we came back into that area and are bouncing. But, like I said, we're going to take our exit, take our loss, and, see if there's better places to allocate funds. Because, like I said, I do feel that there are plenty of other opportunities out there. And we don't have to sit here and hold one of the worst stocks in our portfolio just because we want to be right. It's about making money and not being right. So I'll gladly take the exit and we'll move on. Air Products, this is one we entered on Thursday. Really, this is what I'm looking at as a bull flag, meaning we have a nice, strong day, sideways movement, and then I'm looking for another breakout over this 136.50 area. So that would be what we call a bull flag. So here's your flagpole, here's your flag. So maybe you get another couple days and then a pop higher. But I like the way this one's setting up, and I like the where we have our stop. So I think for right now that one's just a hold, nothing to do there. EQR, equity residential, almost what we have here was a bullish engulfing pattern. Actually, you're splitting hairs, but you could call it a bullish engulfing pattern. Basically meaning that Friday's action was negated, and this bar here on today, Monday, opened lower and closed higher than all Friday's movement. So that bodes well for the stock. With earnings coming up on tomorrow night, this will be one we'll revisit tomorrow. But like I said, for right now, stop is 63.13. Fidelity, I'm going on the idea that this is in another sideways consolidation. So if that's the case, we can move sideways, potentially break out over this $57 level, and then move stop to 56.25. But again, this one has earnings tomorrow, I think, after the close, if it wants to tell me. Oh, I'm sorry, this is tomorrow morning. So this is tomorrow before the open. So let's see how that acts. And we'll maybe if we get a push over 57 tomorrow, then we can move our stop higher. If not, maybe we come down and revisit this trend line and previous resistance. Honeywell, this one just keeps disappointing. We got a nice bounce off this trend line, but basically since we've entered, we have 5 days lower, which is unfortunate. The trend line looks like it's holding. Earnings have passed, so there's no catalyst really. But right now, I would say stop is here, 92.91, or for more aggressive traders, you could have your stop here at 94. But I'm thinking maybe this is actually a failed breakout. We come back lower and maybe consolidate a little bit longer. Or worst case scenario is this is the start of a head and shoulders pattern. So you would move up. Here's your left shoulder, come back down, move up again to a higher price. Here's your right shoulder. I'm sorry, your head. And then maybe we would have to come down, move up again to a lower high, which would be your right shoulder. So these are all things you just look at. Like I said, it's just things to look at this point. Nothing actionable. And price really does dictate our moves. Mondelez, same thing we said over the weekend. Really just moving sideways. Possibly waiting for earnings to pass or move on. And last one being Wyndham. So over the weekend, I identified these couple topping tails as potentially some exhaustion by the bulls. Looks like today we got a little bit of a follow through in that. So maybe this comes down to test this 75.13 level. That's very possible. And at that point, we would really want to see that level hold, because then we would be breaking trend line support and also putting in new lows. So for right now, 75.13 looks like the line in the sand, but we'll see how it reacts. I mean, this could just go sideways and then eventually move higher. A couple of stocks I want to just look at today that triggered, or not actually triggered, but just that were close to triggering. Prologis, this one had earnings the 22nd. We're really starting to get a little bit of a higher low, movement higher. So like I said, over 42.50 is really a good spot to get long. And that would be a nice breakout from this long weekly consolidation. We'd be able to actually keep our stop up here at this 40.09 or 40.90, and then and see where this takes us. But nice definable risk, and a breakout to new highs would be a good trade in that. ExxonMobil actually has earnings coming up on Thursday, but right now we're sitting basically right below all-time highs. So this one looks like it wants to go. I'm looking at potentially redrawing the trend line, something along these lines here. So it looks like it went up, got very ahead of itself, used time to basically revert back to trend line support, and now potentially maybe wants to go higher. But like I said, with earnings coming up on Thursday, until Thursday, that wouldn't be a trade for us. BDX is bouncing off the bottom of the box, but I'm looking at on the weekly coming right into trend line support. So bottom of the box, trend line support. Now if we can get a move over 120, I think that's a really good trade, because we have weekly support and daily support right in the same levels. So it'd be a good place to set our stop, and a good place to know that we were wrong if it failed in those areas. And the last one being 3M. Again, this one on the weekly chart coming into trend line support. On the daily chart, earnings have passed. I'm really looking for a breakout over 146, and then we could set our stop here at 142. So I mean, a $4 stop on a $140 stock. What is that? 4 or 5%? Not even 3-4%. So like I said, that's a really tight stop and a really good risk reward ratio that we could risk $3 or $4 and potentially make $10 or $20. So you got to look at things as how much am I willing to lose, and not how much am I willing to make. As long as your risk and your position sizes are consistent with your plan and your risk tolerance, then I think you're in good shape. And I was talking with somebody on Twitter today, and I said basically, I feel that between 40 and 50% win ratio is extremely successful for a trader. And if you can achieve those and manage your losers and let your winners run, you can be very successful in this business. So one thing I do want from you guys is potentially leave some comments below. I asked the same of the people who watch the free trade idea, but we've been doing this for about a month now. I want to see if it's helpful to you guys, if it's beneficial, if there's something else I could be doing better. Do we go through too many? Do we not go through enough? So, like I said, leave some comments below. Let me know what you think. Because it is a work in progress for not only myself and presenting the information, but also trying to get the information out there in the best possible way. So I do feel the videos are quite helpful. I know that's better for me. I don't really like typing that much because I do it all day at work. But like I said, leave some comments below. Let me know of things you'd like to see different, maybe things that you do like, that you want to see more of, and we'll go from there. Because I am trying to make this into a really good service and a really good education to show you how simplified trading can be, and doesn't really take a whole lot of time and effort during the day. So leave some comments, guys. I appreciate it. That's it for today, guys. So if you haven't already, please follow me on StockTwits, Twitter, and Google+, and subscribe to the YouTube channel. And if you like the video, please give it a thumbs up and leave some comments below. Thanks for watching. See you next time.